321 Capital Limited has decided to review its ICAAP report within a short period of time. Why would this occur? To verify their business recovery plan. To adjust for increases in staff levels. To reflect changes that have occurred in the operating environment. To utilize cost minimization efficiently. The duty, ICAAP, of the AML Compliance Officer is prepares a risk management and procedures manual regarding ML and TF. Determines, records and approves the general policy principles of the obliged entity in relation to the prevention of ML and TF. Evaluates and examines the information received in an internal suspicious report. Acts as the first point of contact with the unit, upon commencement and during an investigation as a result of filing a report to the unit. Which of the below statements are true with regards to an AML-CFT training program? The timing, frequency, and content of the training provided to the employees of the various departments is adjusted according to the needs of each obliged entity. The training should be different for new employees and existing employees. The obliged entities should put in place mechanisms to measure and assess the adequacy and effectiveness of staff AML-CFT training, with reference to the results. The training material should not only provide a general information on AML-CFT requirements, but should be aligned with the AML-CFT law, the CySEC directive, the relevant CySEC circulars, etc. Which of the below statements are true with regards to employees' obligations to suspicious reporting? The employees should report to the unit MOKers directly when there is a suspicious arisen for a customer, regarding ML or TF. The obliged entity employees can be personally liable for failure to report information or suspicion, regarding ML or TF. The employees should cooperate and report, without delay to the compliance officer, anything that comes to their attention in relation to transactions or business relationships for which there is a slight suspicion that are related to ML or TF. The obliged entity's employees fulfill their legal obligation to report their suspicions regarding ML and TF, after reporting is performed. An AML compliance officer is looking to establish a suspicious activity reporting process at her small institution. Which of the following would be the best course of action? Allow employees to refer suspicious activity directly to the government authorities to file as quickly as possible. Have employees refer all unusual activity to the internal independent audit department to assess whether the activity should be reported. Have employees refer all unusual activity to senior management to ensure they are aware of all unusual activity within the organization. Have employees refer all unusual activity to her so that she may conduct an investigation into what needs to be reported to authorities. Typically, when should an obliged entity file an STR? Whenever they are preparing to close an account. Whenever they detect unusual or suspicious transactions. Only when they are able to establish the existence of a criminal violation. Only when the Board of Directors approves the filing of the STR. Which of the following would be considered Pillar 2 risks? Reputational risk. Legal entity risk. Operational risk. Concentration risk. Various types of risk can arise when a firm is operating, especially when it deals with financial instruments. Liquidity risk is defined as the risk that changes in market conditions and affects the firm's ability to enter into foreign exchange transactions, liquidate assets with minimal loss of value, appropriately assess credit risk, find new investment opportunities. Company A has entered into an agreement to sell Company B 10,000 barrels of WTI crude oil. The risk that one party fails to deliver the asset or cash value at the time of settlement is known as liquidity risk, foreign exchange risk, settlement risk, operational risk. One of the below reports that is sent to CySEC can be also made public by an AIFM. Which one? Compliance report, risk management report, investment report, balance sheet or statement of assets and liabilities. A major feature of the ICAAP report is to help ensure CIFs are able to hold the appropriate level of external capital in relation to liquidity risk, equity capital in relation to credit risk, internal capital in relation to its risk profile, regulatory capital in relation to market risk. A CIF has various risk typologies covered in Pillar 1 and Pillar 2 of the CRD and Basel Accord. Which of the following risk typologies are not fully covered in Pillar 1? Residual risk, credit risk, market risk, operational risk.